All right, this is the Cow Guy Close, and I am Scott Schulte, otherwise known as the Cow Guy. Thanks for joining. And you can tell the stock market is nervous by the way it's trading as of late. It's afraid that the Fed has lost all credibility, and that would be a very bad thing. And as we stand right now, the Fed has begun its hiking campaign with 0.5% at the last meeting. Future meetings may see larger hikes. That will not be good for growth. The last quarter saw a surprise negative growth of minus 1.4%. Since 1955, every time we've had a quarter of negative growth, 75% of the time, we followed it with another negative quarter of growth. So as we sit right now here, we may be in the midst of a recession. If the definition is 2 quarters in a row of negative growth, there's a 75% chance that we're in one. And hey, no big deal. That has to be part of their plan. The Fed will have to break this in order to fix it. Interest rate hikes won't be enough to stop inflation. So falling into a recession is the next step to bail the Fed out of its self-imposed mess. All right, my next guest has some ideas, I'm sure, about this. Please welcome into the show, Jeff Sica. Thanks for being on the phone, Jeff. Really appreciate your time.
Oh, thanks, Scott. Good to be on with you.
All righty, so I'll let you take over. I'll just say this. Interest rates aren't going to be enough. They're going to have to break something. And so I think in order to fix it, they have to break it first. What do you think?
I think that's a very good analogy. They have to break it to fix it. And I think what we're going to probably look back on is we're going to look back on the fact that this blunder by the Fed, which I would consider to be probably one of the biggest blunders that the Fed has ever made, that this blunder is going to go down in history as one of the worst things they've ever done, primarily because the inflation is already running rampant, and now they're trying to backtrack and head it off. So the months that they kept saying that it's transient, that they kept saying that it was because of the economy reopening. Now they're raising interest rates into a recession. I'm of the belief that we are already in a recession and that this recession is going to get worse. Tomorrow we're going to see the consumer price index, and I think that's going to show that the consumers have finally gotten to the point where they could no longer sustain this inflation and keep the pace of spending. So I think we're in deep trouble here. I think the government has shown that they really don't know that first of all, they've caused a good percentage of this problem, and they don't know what to do to head it off. So in the end, it means we have to all protect ourselves from what's ahead.
Yeah, and President Biden just spoke. Jeff, I don't know if you got to hear what he said, but if you missed it, you didn't miss anything because there really isn't a plan. We haven't put anything together to fight this, and it's very, very serious. And so I was challenged a little earlier today about those views, my views, and about how you have to break it to fix it. And I think that, this doesn't mean we're necessarily going to go into a deep recession, but with a couple of things that are lingering out there, like the European conflict, war, whatever you want to call it, between Russia, Ukraine, and whatever may happen with China, Taiwan, or just China and their lockdown situation anyway, those two things aren't going to solve themselves very quickly. So I say if we do go into a recession, it's going to be it'll be longer, maybe shallow, but a lot longer than folks think. I don't think this is going to melt down and have some sort of cataclysmic outcome.
No, but I think what's happening, and I agree with you. I think there's a lot. I think that the whole drive behind suppressing interest rates, artificially suppressing interest rates for as long as they did, and they didn't look at what the unintended consequences of that would be, and they didn't look at what the unintended consequence would be of all this government spending. And you bring up Biden's talk. I did watch it. Unfortunately, I was watching it while I was eating lunch, so I was having a very hard time keeping the lunch down as I'm listening to it, because what he's essentially saying is it's Putin's fault, it's the GOP's fault, It's the pandemic's fault. No responsibility from the federal government. That concerns me greatly because I don't know any problems in economic problems or problems in general that could ever be solved without taking responsibility. And there's no responsibility from the federal government, and there's no real solution. So I think what's going to ultimately happen is consumers, when you look at consumers have certain needs, and they do what they have to do to survive. And I think we're going to come out of this. I think it's going to be, like you said, it might be longer than we like, but I think we're going to come out of it. Where I'm more concerned is I'm concerned about the amount of leverage that is in the market right now. I'm concerned about the fact that a couple years ago there was over $1 trillion in margin debt. That's since come down a little, but there's still a tremendous amount of margin. When you had markets going up every single day, and then you had that 15 to 20 million Robinhood investors that are borrowing at pennies on the dollar to buy stock, you had to know that when this thing turns around, the selling is going to be very severe because the margin clerks are looking to keep their margin balances down, and they're forcing these sales.
Yep.
So that concerns me greatly. Going forward, I just think that, any bull market, everybody gets spoiled. That old expression, don't confuse your brains with a bull market. That's very, very true, and I think that's going to prove itself to be true now.
All right. I you know what? I agree with everything you said there. We've got a rough road to hoe here. I really appreciate you coming on the show and laying it out truthfully, letting us know exactly how it stands. All right. That's Jeff Sica. Thank you very much for being on the show today, Jeff. All right, now here's a look at the equity markets that Jeff and I often talk about. Let's take a look at the first one. That's going to be the Dow. Now we're up. See, this has been all over the place. Now we're up 110 points in that Dow. Let's see if the S&P has followed that as well. And I'm sure to some degree it has. But this market can't really find its feet because it doesn't know where it's supposed to be going. That's the bottom line, folks. When markets act like this, they don't know what to do. There's not a consensus on what direction they're supposed to be in. So let's take a look at the NASDAQ. Look at this one. Up 276 points. So they're all trying to find their feet and trying to find a home. And that's what I think what markets do when they just don't know what to do. So let's see if we can get that Russell up. There we go. The Russell's going to be similar, just up 8 to 12 points there. So that's that for those equity markets. That'll give you an idea about what's happening out there. We've heard a lot lately about the switch to renewable energy. And in fact, some might say there's a war on fossil fuels. While the battle for solar just took a serious hit. Why the administration has halted hundreds upon hundreds of projects when the Cow Guy Close returns.